Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of business. Today we are diving into the financial world of KKR Enhanced US Direct Lending Fund. But don't worry, we're not going to get lost in boring details. I'll give you the highlights. This report is about a new credit agreement and some stock sales, which might sound dull, but these moves can tell us a lot about where the company is headed and how risky it might be. It's all about money in and money out. First up, the big news, KKR Enhanced US Direct Lending Fund's Special Purpose Financing Arm, KKR Funding 2, got itself a new revolving credit line. Think of it like a company credit card. They signed a deal called a Revolving Credit and Security Agreement to make this happen. A revolving credit line lets them borrow money, pay it back, and borrow it again as needed up to a certain limit in dollars. This credit line is with BNP Paribas, which acts as the middleman or administrative agent. Other lenders are also part of this agreement. The money can be borrowed in US dollars or some other approved currencies. KKR Funding 2 can keep borrowing, repaying, and reborrowing until April of 2028. After that, any money still owed under this credit agreement is due in full on April of 2030, along with the interest. Borrowing this money isn't free. There is an interest rate. The interest rate changes depending on which currency they borrow. If they borrow in US dollars, the interest rate is based on something called 3-month term SOFR, with a 0% floor plus an extra 1.85% per year. After April 2028, that extra percentage goes up to 2.35% also. Just for having this credit line available, KKR Funding 2 has to pay a fee on any unused portion. This fee is between 0.50% and 1.00 and pay a fee on any unused portion. This fee is between 0.50% and 1.00 pay a gear credit 2028. That extra percentage goes up to 2.35%, also just for having this credit line available. KKR Funding 2 has to pay a fee on any unused portion. This fee is between 0.50% and 1.00 cent floor year. To get this credit line, KKR Funding 2 made promises to the lender. They are also required to meet certain standards, provide regular reports, and follow other common requirements that are normal for these types of lending agreements. This credit agreement also includes a list of things that could go wrong, called events of default. If one of these happens, the lender, BNP Paribas, can cancel the credit line. They can also demand that all outstanding loans and other debts be paid back immediately. If KKR Funding 2 fails to pay, then the interest rate goes up. To make sure the lenders get their money back, KKR Funding 2 has put up pretty much all of its assets as security. This includes its investments and cash. If KKR Funding 2 can't pay, the lenders can take those assets. However, the parent company KKR Enhanced US Direct Lending Fund isn't directly on the hook for this debt. Its risk is limited to how much it has invested in KKR Funding 2. For a complete picture, you can find the full legal details in the credit agreement itself, which is included as an exhibit in this filing. The details we just went over about the credit agreement also create a direct financial obligation or debt for KKR Funding 2. Now let's switch gears and talk about stock sales. In April of 2025, KKR Enhanced US Direct Lending Fund sold shares of its own stock to KKR Enhanced US Direct Lending Fund sold shares of its own stock to KKR Enhanced US Direct Lending Fund L Holdings, LP335 shares, for a total of $40 million. This sale was done privately without registering the shares with the Securities and Exchange Commission. The sale followed some exemptions from the Securities Act. You can find all of these exhibits, the legal documents, at the end of the 8K filing. Team, now let's put this all together. What does this mean for KKR Enhanced US Direct Lending Fund? Here's my take on what we just decoded. The credit facility gives KKR Enhanced US Direct Lending Fund a good deal of flexibility. They can tap into this $200 million credit line whenever they need it for investments or operations. The interest rates are decent and the ability to borrow in different currencies could be useful. But of course, debt is always a double-edged sword. If KKR Funding 2 borrows too much or can't manage its payments, it could run into trouble. The stock sale is also noteworthy. Selling shares to one of their affiliates brought in $40 million of immediate cash. This strengthens the company's balance sheet and could fund future growth. However, it also means that the affiliate now owns a bigger piece of the pie. So, is KKR Enhanced US Direct Lending Fund in a good spot? It's hard to say for sure without digging deeper into their investments and overall strategy. The credit line and stock sale are definitely significant moves, but they also bring added risks. We need to keep an eye on how well they manage their debt and whether their investments pay off. Thanks for watching this episode of Corporate Decoder. I hope I've helped you understand how these types of reports and financial details are important to a company. If you found this helpful, please give us a like, comment below, and don't forget to subscribe for more insights into the world of finance and business. Until next time.